So if I look at question 1, the first thing I see is that they ask me this income statement and the balance sheet. Now remember, they don't have to tell me it's an income and balance. You have to know those big words, the comprehensive income and financial position. Something you need to know. But now can you see that both of them is done from the same information? So to save time, what you do is you do the income statement and that balance sheet exactly at the same time. In other words, you're not going to read the info and do the income statement, and once you're done, you go over to the balance sheet. You're not going to do that. Second thing you need to know is you need to know what accounts is balance sheet accounts and which one is nominal accounts. Now, if I look here, these ones are all balance sheet accounts going to the balance sheet. So if I go to the balance sheet, first thing I see, the format isn't complete. So I immediately go and I complete the format. And now I go look. Ordinary share capital is a question mark. Now, can you see there's no years on the top? There's no debits and credits on the top. So now you need to assume, what is this info? But now they tell me it's balances and they give me a date. So both these balances is 29 February 24. So you can safely assume it's debit and credit. Okay. And you can just go look if you see, oh, provision for bad debts is on the credit side. You see? Which you know is on the credit side. Okay. Which is weird for me. I have to say to you, this is for me confusing, because now if I look at sales, they say there it's debit. So I don't understand what they actually wanted here. If this is, so maybe this isn't debit and credit, but this is the previous year. So it's 2023. And can you see, this is not something, this is more in a test, you have to make assumptions like that if they don't give you the info. Okay. So, yes. Okay. So the question is, why didn't they put amounts for the other things? Because maybe they needed you to have the previous year's information for a calculation for this specific thing, but all the others you only need the info for this year. So that is what I assume, because that's what makes the most sense. Okay, now if I go look, I can see from here, this is all B account, so let's go see what I can put in. They haven't given me ordinary share capital, but they did give me retained income. So I can go and I can put in retained income at this stage. Maybe there's adjustments for it later on. I will not know, but I'm going to make, I can always go and change it. Right. Then I see loan. Loan, I know I always wait because I want to see if they didn't give me a loan statement. Remember, if I look at the T account for loan, if I look at the T for loan, I have an opening, closing, whatever I paid back, and interest. And I, for my balance sheet, want to take the closing less the short-term loan. You see? But in the usually in the trial balance, you take the opening less whatever we paid back is that amount that they give for the loan. So I know this is usually the opening less the bank. But let's go see. So I never put that in clean anywhere. Unless, how do I get to the closing balance? I can most now see if that is already the opening less the payment. If I add the interest, I get the closing. Okay, so there has been times where they gave it like that. So be aware. Okay, so let's just go on. So loan. My point is, I'm not going to write anything there. I'm going to wait for the loan statement. Let's go on. What else do I see? They give me fixed deposit, question mark. So I still need to calculate the fixed deposit. I see there is a debtor's control, and I know debtor's control is a receivable. So please go write that in, because that already gives you one tick. Provision for bad debts at this stage is 24. But I know Apparently that is last year's. So I know there's most probably going to be an adjustment. Okay? Then I go trading stock at this stage. I know it's inventory. But I first just want to see, I'm going to mark that because I first want to see, is there maybe an adjustment where they did a new stock take? SAS, can you see? That one is what we already paid. Okay? You're not going to show that amount anywhere in the balance sheet. You're going to draw a T for SAS. You're going to draw a T for SAS, and you're going to put that amount here on the debit side. 1812,730. And then on this side, you're going to put the income tax amount from the income statement. If this one is bigger than this one, it's going to be a receivable because it means I paid more than I owed. If this one is smaller than that one, it's going to be a payable because I paid less than I owed. Can you see? It will always be the difference between the two. Okay. Next one, I see there's bank favorable, but it's a question mark. And then there's creditors, which I know is a payable, so I go put it in. Already, just by doing this, I already got 2 ticks straight already. Actually, 3 ticks. No? Okay. Now, let's go look. Income statement. What am I going to do with the income statement? Now, if I look at the income statement, they already put in sales, I assume less debtors allowance, cost of sales. Now, can you see when they black something like that? Please don't go and fill it in. Because that blackout means they're not going to mark it. Okay. So now if I look at this, I see there's director's fees. So I go put in. Director fee is 1307,840. I see rent. Rent is the income. Rent is 258,300. Audit fee. Audit fee isn't there, so I put in audit fee 69720. Commission income. I see there's a question mark, but I go put it in so I don't forget to do it. Stationery 68,300. Dividends on ordinary shares I leave. Because dividends on ordinary shares is part of my retained income. Okay. And the fact that they say that this is the end of February, it means we can assume that's already been included. So now let's go look at the adjustments. And I see there's quite a lot. No? There's quite a lot of adjustments. So the first one, commission for the year has been received in full at a rate of 4% of total sales. So now what are they saying? There's no accrued income, there's no income received in advance. I received the full amount and it's from the sales. So I need to take sales, which is 20335, né? So it would be that times 4%, and what does that give you? 80. And there we go. Next one. Only 2/3 of the audit fees were paid. The balance will be paid in March. Can you see it's an accrued expense? Okay. Now let's go look. What did they give me? Oh, they already gave me the audit fee. Now that 69,720 is 2/3. Isn't that right? So what do I need? I still need a third. So I'm going to do a little calculation here. That 69,720 is equal to 2/3. Okay, so how will I get it? What am I going to do? I'm going to divide it by 2 and I'm going to times it with 3. Isn't that? Isn't that what we are going to do? And then if you do that, no, I'm doing it wrong. You guys are letting me do it, you see. So, no, this is not what I did. Oh, I see. I did do it, but then I put that nonsense there. So I want to times with 3 over 2, and I will get the total expense. Right. And the total expense is going to be what? 104? 580. But now if I look, can you see there's something short? Ne? So what is short? So if I do the 69,720 and I say, oh, I know this is 2 parts, but I'm looking for 1 UK, I will also get the accrued expense. Can you see that's actually easier? So what is my accrued expense then? 86. Okay, sorry for that. And now I know, because this is an accrued expense, it's going to influence my balance sheet. So if I go to the balance sheet, where will I put that accrued expense? I will put it with payables, because accrued expense is a payable. And it doesn't matter if your amount is wrong, but if you have shown me that it's the same amount that you added here, ne, you'll get a bagel. 34860. You see, there's another bagel for you. Okay, so is we all on the same page? Okay, next one. And here we get to provision for bad debts. And you know how many of you had that wrong? I just need you to read what they say here. They say, the increase in the provision for bad debts was not recorded. The increase, meaning they give you the adjustment. Remember, usually what happens is they will tell you, oh, this is your debtors. You calculate the percentage. It gives you the new provision. You subtract the old provision, and that gives you the adjustment. If I have to increase it, it's an expense. If I have to decrease it, it's an income. Remember, that's how we used to do it. So now what do they say? They say, we increased the provision. So they're giving me this. Read it again, see if you can see it. The increase by. So they increased it with 6.5. And if they increase it now, we must now establish
Income, expense.
It's an expense. Provision for bad debts, adjustment, 6.5. Half of you guys went and added to the provision or subtracted it to. That doesn't occur in the income statement. In the balance sheet, though, it now makes my provision more. So in the end, my provision is going to be 30,500. Can you guys see what I did? So you can do it in a bracket like I did it here, or you can say less 24,000, less 65,000, or you can still also say less 3,500. All three of those methods gives you the same answer. Next one. They say electronic equipment was donated to a local children's home. So what is electronic equipment? It's anything from phones to computers to faxes. Oh, you don't know faxes anymore. Gross profit of 22,400 has been forfeited on the stock. If we have sold it, we would have made 22,400. The markup on this item is 35,000 on cost. The bookkeeper has not recorded this entry. Now let's quickly go back in our head to the AOL. How will I record this transaction? I will debit donations and I will credit trading stock. Okay? Now, what's happening here? Let's think. Let's all think together. What are they giving me? If I donate goods, do I donate it at the sales price or the cost price? At the cost price. They didn't give me the cost price. What did they give me? They gave me the markup. How do I get the markup? I get the markup by saying the cost price times 100 over 100 plus the markup, ne, gives me the selling price. Or if I want to have the profit, I would say the markup over 100, and that will give me the profit. Am I still talking the truth here? Okay, because cost price is mos 100. Okay, now what did they give me here? They gave me the markup is 35%, right? So I know the cost price times 35% gives me 22,400. So how will I get the cost price? I will just go and say times 100 over 35. Okay. How do I know the cost price is 100? Remember, it's most cost price plus profit gives me sales price. So if I buy stock, okay, let's say I buy this Stabilo. Oh, I'm on YouTube, I can't advertise. So let's say I buy the highlighter, right? So this highlighter is 20 Rand. Now I give it a markup of 100%. What am I going to sell it at? 40 Rand. How did I know what to work it on? I worked it on this original price as a percentage. And the original price is the cost price. And that is why it's 100. Because I worked the profit as a percentage of the cost price. So let's say the profit is then 35, then the selling price is 135. What information did they give me? They gave me the information of the profit. So what is the one that I have? The known one. It's the profit. What is the unknown one I'm looking for? The cost. You see how I got to that? 100 unknown over known. You guys with me? So what's my donation? Donation is 64,000 on the dot. Okay, but now what's happening with my donation? What's happening with the stock? Let's quickly go look. Now let's quickly look at my T account for trading stock. At this stage I made a donation of 64. Okay? If I look here, what is my trial balance amount? My trial balance is 982,400. 982,400. Okay? Now if I go look, I counted stock 923. So 923,200. So let's see. If I add this, what does it give me? It gives me 002. Anybody who wants to help can? 789. Can you now see that your minus side is more than your plus side? Can you guys see that? How much more? Use your calculator, not your brain. Thank you. 5,800 and it's 4,800 and it's balancing on the plus side. So that makes it a surplus. Trading stock, surplus. 5,800. 4,800. And please don't do what I just did. What is it that I did wrong? I did my calculation on the question paper. So the marker cannot go and mark it there. So I have to go and show the marker. How did I get to 48? So I will say 982,400 less the 64 that I donated, less the closing balance. Okay, it's very important that you show that. Because if you forgot about the 64, or if you have calculated the 64 wrong, you can still get that tick, and the baby. You hear me? Okay. Now, if I go to the inventory in the balance sheet, what amount am I going to use here?
This one.
Oh, I use the count, because what I count is right. And I know that the stock that I donated was donated before the count. Can you see? It's before the count, meaning those stock are already gone. If they have told you that those stock has not been collected yet, then it means it's part of the stock take, and then I need to subtract it. Okay, so always read. So now let's go to rent. So rent was increased, and it was 1 month in advance. So immediately I already know income in advance is a payable. So I'm going to have an amount there, right? So now let's go calculate. They tell me that the rent, my year, ends when? 28 February, right? And 1 month in advance. Now they tell me the rent increased on the 1st of July. So how many months did this tenant pay the increase? July, August, September, October, November, December, January, February, and March. So it's 9 months. So for 9 months, he paid 2,700 more. Okay? So how much did he pay more? What is 9 times 27? So this is how much he paid extra. So this is step 1. Step 2 is I take the rent income. What is the rent income? It is 258,300. I subtract the 24,300 because I want to see how much rent would this guy pay if there was no increase. So this gives me what? 234,300. Okay. And this is for how many months? 13 months, because he paid 1 month in advance. Okay? So what was the rent before the increase? Okay, is there no 3? Only flowers. Okay, so 234 divided 13 gives me? On the dot 18. So this was before the increase. What was the increase? 27. So can you see after the increase it's 27. So I know that 27 is income received in advance, meaning it's a payable. And I also know I need to subtract it from the rent. Because, why? Oh, it's in advance. It's for next year. You're starting to get this. What's wrong?